Hello winners and happy Easter. In this video you're going to watch a conversation between me and Jared, a conversation that I would normally charge $300 for. In this conversation we go through time frames I use, how often do I check my charts, when is a pullback or is a retracement or is a new trend. We go through NFP, what I think about NFP and how I trade or not trade NFP. There is a bonus section at the end of pivot points, and there is information about carry trade. So there's a lot of information. So just stay along, join in, and in the description below I have given you some timestamps of where I talk about the different things. Okay? In this video is only for education purposes and is not for investment advice. So my name is MINDBLOWING, Forex trader, mentor, and economist. Please give your comments below afterwards of what you learned. I'm massively thankful for everyone who joins in and watches it. Until next time, stay safe, do not risk money you can afford to lose, and happy Easter.
Yeah, I guess I have a few questions. I mean, I've been following your videos and your advice and stuff, and I'm curious, one, how you said you use pivots. That's the only indicator you use.
Yeah.
I'm just kind of curious how you use that. And I guess I'm kind of curious, like, what time frames you primarily use? Obviously you use the 1 hour. I'm wondering, like, what's the lowest time frame you'll go to as well, to like maybe find entries or something. Stuff like that. Like when you kind of just like come to the charts and you're just kind of like, like what's that process like? You're just like looking through, just kind of like, let me go through all the charts and just kind of look for bias based on momentum and price action, or
well, okay, so with my strategy I can do 15, but then it becomes more like a day trade.
15-minute.
15.
Okay, yeah.
Then it becomes like more a day trade. It becomes more like scalp that could turn into a swing trade.
Yeah.
So for me, that's low. I have done it. I have been burned. And a burned kid shies the fire. So this is Norwegian saying. So I would go to 1 hour.
1 hour.
1 hour and 4 hours. Once you're talking about reversal of trends, 4 hour is a bit big.
Yeah.
Like if you're waiting for the reversal pattern 4 hours, you're already too late.
Right.
But 4 hours is the way to go of reversal of larger trends.
Right.
Like what we have now, from beginning of March on Euro USD, for example, where you have this large downtrend. To reverse that, you really need some significant move around. Let me share my screen, I guess. I think that's better. And there you are. Share. So when you have this large move down,
okay, here we go. Yep.
It takes more than just let's flip it up like a V-shape reversal anymore. Yeah. It needs to really take out those sellers, not to take them out as in punch them, but you have to let them get out of the market at the price they want. So the reason why you normally see a double bottom is because they took profit here, and then because they took profit, the price went up. Now they have to drive it down again to take out this to get the same price again.
Yeah.
Then it has made this double bottom. And then it's likely to make a new high again. And once you get this new high, that's when you engage the other party. So when you have a reversal of trend of how I explained it, taking turns. Now we have taken it down. Now it's your turn. I'm just carefully giving it to you and giving it a close. So now I have taken profit. Now you can buy it up.
Yeah.
That's how I see it. And what was the other question? So 1 hour time frame.
So 1 hour time frame,
I would analyze on 4 hour maybe. Daily is too high for me. Like there's not enough information from me to see reversals. Like if it's daily, I wouldn't even see.
Right. Completely.
And
And then
so,
how how frequently do you have like certain times you'll go through like all the charts like on every 4 hours, or like how do you approach that? Like, how often are you, like I said, are you just going through all the charts and at once when you look, or you obviously you said you have your plan. So you set up your plan, maybe you have your plan for the week, you think, okay, this week I'm going to try and sell euro, I'm going to buy AN pairs, whatever. And then I'm going to find like find the strength. Cause what I generally try and do is figure out strength and weakness and then try and pair, strength against weakness. So it's like, but yeah, so I'm just kind of curious, like what's that process look like as far as scanning the charts, and how frequently do you do that?
Yeah. I only scan through the currency that I'm working the trade. So yens. I would scan through yens. So yeah, Australia, New Zealand, Euro. That's 5 pairs. Yeah, that's what I would scan through. And then nowadays the yen pairs haven't been performing as how I would love it to be. So I'm on USD at the moment, which is fundamentally the same thing.
Okay.
What I mean by that is they move on the same type of risk sentiment in the market.
Right.
Okay.
Right. When it's risk off, they go, yen goes down, and when it's risk, when it's risk on, people sell yen. When it's risk off, they buy it, or whatever. Opposite.
Yeah.
When it's risk
No. You're right.
Yeah, you risk off, they buy it. Yeah.
When it's risk on, they sell it, because risk is on. Then they will get a return on the risk than the risk is, and then with everything is risky, is risk off, because they are now taking its mind twister. True, but so
the buy yen pairs,
USD,
sell yen pairs.
The American dollar has nowadays been the strongest one. In this crisis, and then yen has kind of followed along, and then Swiss has also followed along. But it's kind of the USD that has been giving the most pips, I guess.
Yeah.
And for that matter, I stay away from USD yen and USD Swiss, because those three are strong.
Right.
Fundamentally, but of course they move as anything else in this chart.
Yep.
And then so I don't flip through. And when do I do it? Good question. I would say that I do it in the weekend. I'm keeping an eye on Monday. I'm really on Monday, really on Tuesday, and it fades from Tuesday.
Okay.
So today I'm like, okay, the market can do whatever it wants, but
because you feel like by Tuesday the trend for the week has kind of been set. Yeah.
So there's 2 things that can happen by Tuesday. One, the move is so strong and so quick, it has already taken profit by Tuesday.
Right.
That happens.
Okay.
Then that sets up a counter trend, more than likely, or you have to be prepared for a counter trend. So if it hits on Tuesday on take profit for the week, that makes me like, I've lost too much money here. Let me get out. Yeah. And I guess I have examples of that. But then if it hits on Thursday, I would then look for the pullback on Friday.
Okay.
So I would either enter on Friday or Monday.
Friday or Monday?
Possibly Tuesday. So I would analyze on Thursdays.
Okay.
At least have a clear mind of what the market is actually doing on Thursday. And then be ready for something on Friday, and then Monday should be going. So for example, for Euro USD right now, I think this is Friday. This is from
that's Friday,
midnight me. So here I'm like, okay, if I get a new low, I'm like, oh, this is nice. But I find this pattern to not be as well. It was a new high here, so the high, the double tops is not as level as I wanted. So I'm like, okay, let me wait for that. And then I got a new low. I want that, but
Yeah.
the next close is so strong, I'm like, goodbye.
Yeah.
But then I would wait.
Right.
So I would be ready on Friday, but I would be cautious. But if this happened on Monday, this reversal here,
Yeah.
which it did up here instead, I'm game on.
Yeah. Okay. Got it.
So yeah. And then I would then, well, this is one of the smaller, I use this is like 15 minutes actually.
This is what?
I think this is reversal on
Yeah.
15 minutes
Yeah.
because it's so
Yeah.
little on 1 hour. But above here is a monthly pivot.
Okay.
So that's strong.
Yeah.
So when the price comes from below a monthly pivot and ends there, that normally holds as resistance.
Monthly pivot meaning that's where it ended, like that's where the last month the price closed.
So for every period, daily, weekly, and monthly, there is pivot points that is determined by highs and lows in the mean and the close price of the previous period. So when the trend is strong up in the previous period, you will end the period on the sell price for the new period. Okay.
Okay.
So if this if let's see, Norwegian, sorry. So if if that was the end of the month, okay, that was the end, that was the beginning. That would be a sell pivot. And a strong indication of a sell. Then you take profit for the week, then you have a reversal, then you have a sell. So, but this one isn't as strong because the market moved much more during the month. So this was just halfway, but still in the sell zone. From the for next month. So here we have the sell price for the month, and I haven't drawn it though, but somewhere in between here is the middle, is a central monthly pivot, which means so anything from above this is sell area. Okay, and anything between here, the central pivot, and the buy is the buy area. So if this is actually the price, I'm not sure, but if that was the price, that means that the month end started in the sell zone. Then I'm game. That's just one reason. Then I need price action, as in double top, lower low, lower high. I need a price action reversal for that to happen. And then you can also say that it's of the fib. That means it will be a new top bottom if it holds. But I don't use pivot points that much. But the other way I would say is I had done this on Thursday. Two zones I would sell from. And that's why I was really engaged in this one, because if this one held as resistance, it would be a good place to turn down again. But if this resistance didn't hold, I would have let it go. So I always make a plan A and plan B, because I don't know where it will end. And also on Friday, it really had a good run to take profit. So for me, what I use the monthly for is to have a plan A and a plan B. Plan A is this month is a bit mixed up, but if price ends, so one thing, just make it clear, if the trend is strong and it ends at the top, that's the sell pivot. If it goes strongly down, 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 and it ends at the bottom, that's the buy. That's where the buy pivot will be. So if it came down and it ended here, the month, for example, that would be the buy price for the next month. I would be more than willing able to have that as my plan A. And then if that didn't happen, if this trend just went through that pivot lower and lower and lower and lower and lower, I would look for a plan B when they are supposed to take profit, which for this next month is down here at 104.
But I'm still confused. Where are you getting these monthly pivots? Like, how is it? Is that from the month chart? No.
It's actually an indicator for MT4.
Oh, okay.
That
for
is
MT4. Okay.
okay. So yeah, that you have to have a new computer. I guess it works on
What's
Mac.
that?
You have to have a new computer. Like you have to install the trading terminal.
Wait, MT4?
For MT4, yeah. MT4.
Yeah, I have MT4. Yeah.
Just try. Something you can take it on the phone. That's like.
Oh, okay. No,
Yeah.
I got it. No, yeah, I have MT4.
Yeah. So
okay,
installing it, and
Yeah.
then that's what I would use.
Yep.
So that's done mathematically.
Yeah, sure. Okay, I got it. Okay, but it's an indicator that's charting it.
So what I would say, to explain it very briefly, is it's future support and resistance.
Yeah.
So for me, I only have it as my target indicator kind of a thing.
Yeah.
But it doesn't need to be respected. It's a place or an area of interest, but it can just go through it, nothing happen, or it can respect it. But more often than not, it does respect. So for me, I do use monthly, which helps me with bigger trends, I would say.
Yeah.
And then the weekly is kind of just combining where the buy area is for that week, if we are in a bullish trend for the month, so that you take the step ups, because it doesn't go straight up. Right? So once you get those waves, you work yourself your way up. Yeah. So it's an indicator that I manually duplicate into my charts to help you guys.
Yeah, got it. And is that what are these, the green, like when you do your charts and you have like these green blocks, and then you've got the way you set up like this part with the red and the green, like what would look like a sell setup?
Yeah.
Or is that a buy setup? What does that represent?
I feel like I failed to table this one, but I'm trying, but I've got to forget. Okay. But this box is the sell area for the week.
Oh, I see. Okay. Got it.
And this is the buy box. And any buyer would love this to happen.
Right.
And specifically, the top price is specifically interesting. And for the sellers, and the bottom price is specifically interesting for the buyers.
Got it. Okay.
So if the week begins on the buy bid, together with a monthly, that's dynamite.
Okay.
So, and then the green boxes is targets. So
is what is it?
Targets, where you would like to take profit.
Right. I see. Okay. Yep.
And specifically, the first price of 1400 is specifically interesting. That's the what do you call it? Passive? No, like the least aggressive entry. No, target. Sorry, target.
Yeah.
And the top one is the aggressive. That's mean you have really extended the move.
Okay.
Like you really pushed it.
Yep.
So yeah. So sometimes just barely, like within 5 pips, touches that area and it can reverse.
Yeah.
That actually happened to me. That wasn't long ago on USD CAD. I don't know if I have that chart. Yeah, here it is. Oh, I still remember it like a nightmare. So the thing is, it's 0.5. I think, no, is that one? I think. Like just a pip, just less than a pip away from my take profit. And it went up.
Yeah.
So that's how accurate it was, and I forgot to add the spreads. I think that was the one that killed me. And it went to break even, and I didn't get anything of it.
Yeah.
So that's how accurate and how frustrating it is. But yeah.
Yeah.
Uh,
And those targets are based off of the pivots. So those targets are based off
Yeah.
of how you calculate. Yeah. Okay.
yeah, the pivots.
Got it.
But also it's I just want to make it a bit more in. Oh, yeah, I was used to like, where does all this come from? Euro USD. So also that's also where you would expect, like the sellers this week, you would actually
Yeah.
expect price to come back down to 106.30, which is this low when it has made a 618 retracement, which indicates a double bottom. So it's not like let's make a crazy target, but it's reasonable. But if you're a buyer, you're like, okay, this is the same top as this one.
Yeah.
Yeah, on the same top. So it's not very far off. And
Yeah.
I don't know, maybe the banks are actually using it, but
Yeah.
it seems like, I cannot say because I haven't asked them.
Yeah.
Do you use data points? I don't know. But yeah, so that's the two things that I use. I use rolls. I use and then I enter on pullbacks when it's trending.
Right.
Yeah.
So that was the other thing. Like it's like kind of determining, it's like if it's actually a pull. At what point do you confirm the pullback?
When it's. Do you mean when it's no longer a pullback? I saw that between the lines, but yeah. So how do I define it as a pullback?
Yeah, like
okay.
Exactly.
Okay. See if I can find myself here. Okay, good. Now we can say this is a new trend. We have a new low. That's what you need. You need a new low to have a new trend. Pullback. Back to support, now turning resistance based on that low there. It's a retracement pullback because it did not go beyond that high there.
Right.
Then you have this one here. That's a new low, pullback, but it does not go above that high. So it's still okay. This one is still more difficult. It still plays this support, this resistance, but it doesn't go above. It doesn't close above. Sorry, this high here.
Yeah.
Again, support, turning resistance. It doesn't go above this high. So that's how I go along.
Right. So
in this case, it's different.
Yeah.
So
it's what?
Yeah.
Yeah.
In this case is different. Now we don't have a new low, we don't have a new high. So until it breaks out again, it's sideways, and it was sideways for quite some time.
Yeah.
Yeah, sorry. Go ahead.
Got it. No, okay, I got it. So basically, it's based off the close, like if the close of the candle.
Yeah, not the wick.
Doesn't. Yeah.
Or
and
then
Yeah. Okay. Got it.
Talk too much. That's all. And then when it resumes, same thing. Support turning the new low. Support turning resistance. Support turning resistance. And then when it touches the second time after long trend, that's a warning sign. Okay.
Yeah.
So, well, even this one is a warning sign here. So you need a new low. And here it happens again. The second touch is, to me, a warning sign of a potential reversal. So down, back up, and then touches here again and stays there for some time. That's a warning sign for me.
Okay.
Because, and then if I sell again, I am likely to have a double bottom.
Right.
Then I'm likely to have a high. Because I'm trained to see reversals. I just know in my head, if I see that, that's going to happen. So it clicks in my mind. I'm like, oh no, no.
Right.
Because I know when I see that, I get excited. When I see reversal, I see the bottom, I see a price coming back up to the same high again. I'm like, I know, new high, and you're going to lose all your profits because now it's just going to go higher again.
Right.
Yeah.
Right.
So that's kind of here. Comes back up to the same high
Right.
again,
Yeah.
makes a double
Yeah.
bottom, and
Yep.
does not make a new low again.
Yeah.
And I would actually expect this to happen and then buy it. And I'm not, and as a buyer, if you twist, I'm not a buyer until it's made a new high. So over here.
Okay.
So for example, if I was a buyer here, I would wait for the high, then buy the pullback because it can just turn lower. It can just be a consolidation.
Got it.
Hmm.
That makes a lot of sense.
I find it very,
Very simple. Very simple, but it makes a lot of sense.
Thank you.
Yeah.
That's what I.
So on average, how many? Yeah. Sorry. On average, how many? I mean, obviously it's gonna vary, but how many trades a week would you say you enter into based on your system? Like, what is that? How does that average out?
You're asking very personal question. Only my wife knows.
Well, just curious, like.
Just
oh, really? I mean, you don't have. Oh, okay.
No.
Oh, okay, yeah.
I will answer. I'm just joking. I need that humor.
Oh,
it's 10 p.m. now. I'm tired.
Oh, okay.
No, it depends. So per pair, once it goes in my way, I would have. Okay, so I would have.
Because you're stacking.
Yeah, I have 3.
What they call it? You're like in getting. You're like kind of building in.
Yeah, day trading into swing trading, or scalping into. So I would go to the daily pivots. I would enter a new trade every single day. So I would have 3 trades now on EURUSD for every single day. And then so I would have 3 or 4 trades. That's just weekly, and then I have monthly on top of that. Once it goes in my way, and then I take it into the trend, and then I'm done. And I can then wait for another week or 2 weeks until the new month.
Okay.
So I make once it goes in my way, well, we don't have these super trends anymore. It can happen now after all this craziness is done, I guess. That EURUSD is going to happen. But once you just have these movements within 1,000 pips, then you take profit after 2 weeks and you're done. But so I would say in a good week, 5 entry points.
Okay.
So 3 for the week and 2 for the month, which is also the same as the week. And then I would just hold those 2 for the month longer to see how the longer trend goes.
Got it.
And then I would wait until when it's over, and I can wait until the new month per pair. And then you have 4. And then you have. Yeah, so I would have like 15, maybe 15 in a month would be okay. Yeah.
Per pair.
No, 15 in total.
Yeah. Oh, total.
Yeah, but 5 per pair, because I would say that out of 5, 3 of them goes in the same direction. For example, right now, pound USD is being a child and being bullish at the same time as dollar being bullish. So that doesn't fall. But Euro falls, Aussie falls, New Zealand falls. Fine, I can take that.
Right. So, you're talking about per currency. You're not talking about per pair.
I'm talking per currency pair. So I have 5 on Aussie USD, 5 on Euro USD, 5 on New Zealand USD.
Right, because you're just basically trading the dollar right now, is what you said. Basically, you're not
because
of not every pair. Right.
No. So I would stick to one currency.
Right. Okay.
And then I would do this. And then only that. Because one mistake that I know people and I did was just running through the charts and see if I can find something that fits my worldview.
Right. Yeah.
But I find myself then being what do you call it? Disillusioned. Like not in English and okay.
It's okay.
So to not have clarity what you call that?
Yeah.
Delusional,
Disillusioned. Yeah. Disillusioned. Or yeah. Delusional.
something like that.
Yeah.
Because I don't have. I don't. Well, I'm just rushing through the pairs and I'm watching this pair because I'm into this pair. Then I can lose another big trade on a different pair, a different
Yeah.
currency. So I just find myself torn and lost because I always lost and I'll never found the big moves.
Right.
But for me, when I now have this only one currency policy, kind of, it's not strict. It's just a guideline.
Sure. Yeah. Yeah.
I find that I take better trades. I catch the longer trends,
Yeah.
and then I'll catch the bigger trades because I'm watching them, and I know that if I just wait too long enough, something will come.
Right. Right. I got it. Okay. Got it. So like you said, you either pick usually yen or dollar.
Yeah.
Well, right now you pick yen or dollar. Would there be times when you would just do pound, or times when you would just do CAD, or?
I can. I feel like I have the knowledge to it.
Right.
But if I do CAD, it would purely be because of U.S. oil going through the roof because of a trade deal at the moment.
Right. Right.
But right now,
Right.
I wouldn't. Well, then we are back
But
to
basically,
we're back to what am I supposed to follow? Am I then
Right.
losing out on what I'm supposed to as my job do, or am I
Right,
now
right,
doing the side
right.
jobs that ruin the main job, and everything goes out of the window?
Right. So basically, sticking to dollar yen because there's just more. Obviously, there's more volume. They're just more stable currencies. They're just the trend is easier to kind of establish with what they're doing.
It's easier for me to establish the trend because I know when they move or supposed to move,
Right.
and it's like, yeah, it's like your homie. You know your homie. You
Right.
understand. No, you understand its mood. I don't know why you do that analogy now, but yeah, I understand when I'm wrong on those
Yeah.
pairs more than CAD, for example.
Sure.
If you do use CAD, what did it do lately? Has been
What?
wait, just 2 seconds. Here,
Yeah.
I would be like,
Yeah.
what is going on? Here,
Right.
I was
Right.
profit, now I'm in loss, and now I'm in profit again, and I might have
Right.
been bit stopped out at this point.
Right. Yeah. Yeah. Well, plus it seems like actually CAD and dollar like almost kind of follow each other because of the Canadian U.S. relationship. It seems like in terms of the other pairs, it's like the CAD is kind of like following the dollar in terms of its strength compared to other pairs, almost like the Aussie and the Kiwi do, or the Euro and the Swiss do. They're kind of like tied in. So right.
Well, you are onto something, and I don't know the percentage of how much, but Canada. First of all, Canada is dependent on America.
Yeah.
I don't know the ratio, but they're highly dependent. But
Yeah.
the thing is that dollar is run by oil price,
Right.
and highly depend on that, and USD and then
CAD is
oil.
dependent on opens, right?
Wait.
Yeah.
So
Yeah.
CAD is run by oil. Oil
Oil.
is
Yeah.
run
Right.
by demand and
Right.
global growth.
Right.
On the opposite hand, the US dollar weakens, like it goes opposite way when there's global growth.
Okay. Yep.
So yes, it's true that USD CAD moves simultaneously, kind of a thing.
Yeah.
But
Yeah.
it would be a great move once the global risk sentiment, I would call it,
Yeah.
is clear. So if it's terrible in the world, USD CAD is going through the roof, like it has done now.
Yeah.
But if it's happy life, happy wife, then it will fall naturally. Yeah.
Right. That makes sense.
Because so they're both running on the same sentiment. So I can do CAD, I can do Aussie, I can do New Zealand. It's just that they move opposite of what I normally would trade.
Right.
Yeah.
And also because they're generally also the three of those are kind of driven by commodities, so therefore it's like depending on what those commodity markets are doing. Right. And then
Yes.
Aussie obviously is more dependent on the China, what China's what's happening with China for its movement, right? So
it also needs global growth because China is
right,
depending on Europe to go out to sell their products to China, to Europe.
right,
So it's a
right,
whole chain of everyone has to do well for everyone to do well.
right. Completely.
Yeah, and also New Zealand. But New Zealand and Aussie is
Right.
very similar. I don't know what the
Right. Obviously, yeah.
the currency exchange rate is like 1 point something, so it's very equal
Yeah.
in size and value.
Right. Okay, that all makes a lot of sense. So that makes a lot more sense to kind of just focus on. So why not? Do you ever do like say euro? Use euro as a base pair. What do you think about that versus dollar and yen?
I don't understand a euro.
Well, like just trading the euro pairs, like instead
Yeah,
of the dollar pairs and yen pairs.
yeah. So then I could just do the euro yen, euro Swiss, and euro Swiss, euro USD. I can do that,
Yeah.
but I
Right.
don't
Right. Right.
understand euro Aussie, euro
Right.
CAD,
Yeah.
and
Right.
euro pound. So I would be
Right.
limited to 3 pairs.
Right. Right.
And yes, and I
Yeah.
don't understand the movement of euro itself but I understand the USD.
Right.
I think it has to do with the policy,
Yeah.
like what really drives euro for me. Well, it's all about expertise. What are you expert in, right?
Right.
What do you?
Yeah.
I
Yeah.
have really heavy my experience in the risk sentiment, but if you are great at euro, I welcome
Right.
you to share your analysis with me so
Sure.
I can get
Yeah.
entertained and more knowledge. Fine.
No, yeah. No, I think no, it's a good point. It's a good point because it's true. The euro pairs, especially say like the euro Aussie. I mean, it seems almost to me like that's the euro Aussie specifically and the CAD too. It's like they're so volatile, and the pip range is so large that it's almost like made for like crazy scalpers who are just like people with like large volume. Like the moves are just insane. The amount of pips it'll move on a dime, and there's not as much. It can be way more erratic trend wise. I find it's like not as especially like I do a little bit of Elliott wave, and trying to do Elliott wave on like the euro Aussies is like almost impossible. Whereas the euro USD, it's a lot more. The trend patterns are a lot more typical. It's a lot easier to find wave patterns. But yeah, like that's like it just I mean, obviously maybe if you're using straight just Fibonacci you could find some patterns, but it's like where's the like there's the fact that there's no pullback for like 1,000 pips. It's like it just doesn't make any sense. It's hard to right. It's like
I'm going to buy this one in March, and I did, and it just went.
Yeah.
But yeah, so in this kind of a market, well, if I'm a buyer, I'm like, fine, I can do this.
Yeah.
I guess.
Yeah.
But this is not what I trade. This is not how I want the market, because maybe I don't communicate this as much. This sentiment doesn't do now, but it's really fundamental to me. I want price to come to me. I don't want to chase price.
Right.
So, for example, for Euro USD today, where are you today? I have set up small here. Oh, we're 4 on. Okay. So now we have messed up. But I want this to come back up.
Right.
So I'm trading tomorrow now. I'm saying I want it to come up here in this area here. Then I will sell it down tomorrow.
Yeah.
But for the Euro Aussie,
right.
I wouldn't have like, maybe.
Right. Right.
So
exactly. Because it could just keep going. It's not. It's less likely to actually see any kind of pivot.
Yeah.
Right.
No.
Right, exactly.
So for me, I'm like, I'm entered here, and I'm entered here. And if this one just falls through the floor, fine. But if it doesn't fall through the floor and it actually comes up, then I'm ready again.
Enter more. Yeah.
But Euro Aussie looked like it was just. Well, at the moment, I guess that's a small trend, but the overall trend, it's sideways. I don't do range, and this is range to the lower side.
Yeah.
So.
Yeah. Yep. Completely. No, that makes a lot of sense.
Thank you. I try.
Yeah.
10 seconds later. how are you with fundamental analysis and that part?
I mean, I go back and forth. Sometimes I try and follow it, but I haven't spent a ton of time really trying to apply fundamental. Like I get the basic ideas of it, but I don't spend a lot of time on it. I kind of just feel like the chart, it's kind of priced in, has been my approach. And so the chart's kind of, shows me what's going on fundamentally by how it moves. But I think it's something I could probably apply myself more to kind of investing and time into.
Saying that, or the belief that everything's priced in the market, is the biggest lie ever told in a Forex market conversation. Because yes, you can say it's priced in. So for this move to happen, that is, to me, is not technical. It doesn't say like here, because of this, now we need to go through the roof and beyond 700 pips, roughly. Because technically this was the bottom. This was people taking profits, taking money from America to Europe because their carry trade was done.
Right.
Do you know what that means?
Yeah, carry trade?
Yeah.
No, not exactly.
So the difference, so a carry trade is you buy or sell, whatever you do. You buy a high interest currency, and then you sell the low interest, and then you keep the difference.
Right.
So you put your money, so you borrow the money from the low interest, which is now was zero, was minus 0.5%. And before Fed started cutting, it was, in America, it was 175 or something.
Right.
So there's a 2% difference, at least 225.
Right.
And you will get 225 just by holding those two currencies.
Right.
Sounds amazing, right?
Yeah.
Until they start cutting.
Right.
That's when they cut somewhere in here. Around 3rd of March there. So and that's already then, the scare is already there. Okay, they're going to cut. Let's take the money out. Take the money out. And that was the end of the carry trade. So for me, I can explain that instead of saying technically this one should 700 pips up because
they cut the rates.
No, technically, if everything was priced in, technically, I can't explain technically why should it go 700 pips up when another move here is 400 or 500 maybe.
Right.
And then technically, again, how can I then explain that it all of a sudden stopped and went, I don't know how much it is, 1,000 pips down again?
Right.
800, sorry. So goes 800 down again.
Right.
So that clicked for me years ago. Like, I can't explain this. Why? Okay.
Right.
It has to be something greater than I don't understand. So I started to read.
Right.
And then there's a lot of, so I started looking into these news sites, FX Street, investing.com, but there's a lot of noise in there.
Yeah.
So the noise is them telling technically what has happened today.
Right.
Oh, the price has reached 110. Thank you. I already know that.
Yeah.
The price is falling 3% today. Thank you. I know that. I'm in profit.
Yeah.
Thank you. Like the market is crashing. Thank you. I know that. Like that's stuff. But when Trump says that prepare yourself for some really hard times, I can remember seeing yesterday, but something like that.
Yeah.
Or the inflation, the inflation is greater or lower than expected. That's interesting to me. Or some economic data like PMI or something. I would be interested. But all the others, I can't be bothered.
I think US PMI came out today. So for instance, like what would you do with that? Yeah.
It was 49.
Uh-huh. Yeah.
49. That's a recession.
Okay.
So okay, maybe that was Canada. Anyways, those two was out, and
Yeah.
both of them were
Yeah.
below 50,
Low.
which
Yeah.
indicates recession. It's not recession
Yeah.
yet. It has to be a recession for. It has to be below 50 for 1 or 2 quarters. I'm not sure.
Yeah.
So it's the beginning. So that's first move. If it's out of the blue, that happened to euro this year or late last year, where it was
Yeah.
below 50, all of a sudden, then the euro fell like a ton of bricks because it wasn't expected in the market. There was the German PMI coming out. So that was like the pre this, I guess. So other than that, it doesn't move the market so much. But below 50, that's like a line that you don't cross once when you want the market to boom, which you guys have been trying to do now, or which they have tried to do. So yeah. So I do follow it. I take it with a pinch of salt, but the whole clue is, when is there a change in the trend? Are we going slightly down, or is it a dip and then going up? For example, you had the jobless claim last week of 3.3 million.
Yeah.
That's not just a trend, that is a spike up.
Yeah.
Another one was the, what was that? PMI from China 2 weeks ago, I think it was.
Right.
That was 34.
Right.
And below 50 is a recession. So that was also a spike on the graph. So I pay attention to that. But NFP around it was, at least until Friday, it was around, give or take, 200K a month.
Right.
Fine.
Right. Yeah.
But
So
now,
no major change. So,
but now it will be a major change.
Right. So Friday, so this is the question though. So Friday, obviously it's going to be large, although it's still not it's still not going to be as big as next month. Do you think that, so what would your, will you not trade Friday because of that? Or what would your plan be for NFP? Will you basically wait and see what it does after that, or?
My plan is always to not react to the news, but to react to the content of the news. Okay, so when the news comes out, I've been burned sometimes a lot, so many dollars on it, that I'm like, okay, let me not do that. So what I would say, just wait, then I would be out of my positions if it's too close to the price, or I would be break even.
Yeah.
So I have no risk.
Right.
Or at least, and then if it's closer to 50 pips, I would be out. And then if it's news or whatever, if it's with my trend and what I wanted it to do, I can then enter into the aftermath, which is the next 2 weeks of it.
Okay.
So when I did I've kind of lost interest in NFP, but last year I did my analysis on it, and I saw that the initial move was maybe 50 to 100 pips in whatever direction it was. But the aftermath, after 1 hour, was more like, if it was move was 100, the move after was 200 in addition.
Got it. Right.
So would I do 200 more risk-free trade, or should I do the high risk and gamble it?
Right.
So for me, I would stay away, because the move is actually not traders putting in orders. It's actually the opposite of lack of liquidity.
Right.
It's a lack of orders.
Interesting.
That's why it moves.
Yeah.
That's another line that's Teresa's been told.
That's an interesting point. Right. Yeah. It's because the price moves so much because they're searching. There's no one to buy it. There's no orders in, right? So they're searching for orders. Yeah. Got it.
And split second, you can be out.
Yeah.
Because there is no orders at your price.
Right.
On the opposite side, so they can't get you out of your stop loss or whatever. Then you would get a worse price.
Right.
Because there's no liquidity.
Yeah. Yep.
And also depends what kind of broker you have. Are they directly into the market? or are they just dealing within themselves? So if they're
Yeah.
dealing within themselves, which happens, there's even less liquidity.
Yeah.
And that's when you have market manipulations. But
Yep.
yeah, that's
That makes a
different
lot of
comment.
sense.
Yeah.
That makes a lot of sense.
So I would rather be in the aftermath, and I would rather follow what the larger trend is. And I also believe that news is not my enemy, it's my friend. I
Yeah.
want liquidity events to drive price in my direction.
Yeah.
So not this year, but normally around August, September, good positive news comes out, like positive GDP, positive inflation, positive. Then that pushes the price in my direction. But I don't know about this year. I am yet to find out what I'm going to do now. But normally I would be very positive on global growth in August.
Yeah.
And then the news will come out positively, and that pushes the trade in my direction. More so to, who is it? I listened to a podcast yesterday about, okay, this might be not politically correct, but when you have the mindset of the poor mindset, you fear authority, you fear your dentist, you fear your police officer, you fear authority. But if you have a rich mindset, you embrace authority and say, how can this help me? How can these resources help me get to my end goal?
Yeah.
For example, you have people who give out money to charities or to art galleries or whatever. So you can apply for that. That's a resource. But if you have a closed mindset, you're like, no, this is too difficult. This is a lot of rules. I have to do this. I have to do that. No, let me not do it. Okay.
Yeah.
So for me, I see news events, economic data releases as my own resources that will push the trend in my direction.
Got it. That makes a lot of sense.
Instead of fearing it, because that's what retail traders do. They fear the news because they will take their profits.
Right.
And some news is actually, if it goes against you, for example, it's actually a new reason to enter the market again at a better price.
Right.
That happens a lot on NFP. Like it
What's
will.
that? Oh yeah.
It will happen on NFP. It will fall fast. You enter it, go back up again.
Yeah. Completely. Oh yeah, I've seen that a lot. Yep. Yeah.
It's on your mind.
Well, there's also the idea that they're stop hunting, right? That they're basically using it to stop hunt.
But if you twist
Looking
it
for
and
liquidity.
say it's actually for entries.
No, right. Yeah. So do you think you can use, so basically NFP will happen Friday, we'll see what the direction is, and then you consider that going into the next week, you'll like say, okay, well, what was the trend coming out of NFP? That should tell me a lot about what's going to happen next week.
Let me give you something to think about. When was that? 1st of December. Is it? 2nd of December. 20. Yeah, here we are. Okay. It's was Friday? 12 December, so Friday. Okay, good. Here.
Yep.
I entered here. It goes instantly into profit.
Yep.
And target was around here because there's been a lot of side miss movement. It wasn't too high. So price went off my target. I held my trade.
Yep.
This candle here is NFP.
Yep.
It was way above expectation. It was positive, awesome, right. Bring. America's doing extremely well.
Yeah.
But the price is falling.
Yeah.
It fell. Why?
Well, because that's good for the U.S. right now. So they're
supposed
selling
to be rising.
Okay.
only to get a better entry
Right.
so we can rise again.
Yeah.
And I remember this one because I was so scared
Hey.
because I saw this one coming crashing down,
Yeah.
and I had my entry down here. I'm like,
Yeah.
don't you dare, don't you dare.
Yeah.
But that's a perfect example for me that
Right.
it works with me. You can say it's a stop loss hunt,
Right.
but
Right.
it's
Right.
also another way to market.
Right.
So yeah, but it's like when you have $1 billion,
Right.
it matters. With 68 pips matters, but if you have 100,
Right.
68 pips really.
Yeah.
Okay, well, it matters to you, but it really doesn't matter. But if you have $1 billion, that's a lot of money. But if you only have 100, not so much.
Yeah. Yeah. Yeah.
You'll lose that.
Yeah.
So that's why.
Totally. Yeah. Yeah. That makes a lot of sense.
Beautiful thought, huh?
Yeah.
What else should I tell you? Double bottom, if they took profit. That's where they take profit. Take it down again.
Yeah.
Then, is it a downtrend? Okay, small downtrend, I guess. But still, yeah. Take profit. Do it again. Let the buyers take it up.
Yeah.
Okay. What do I say? The markets can be a market of being a hostile market. Like it's hostile to you.
Yeah.
Because it moves a lot, takes away your pips, takes away your money. It takes away from you.
Yeah.
But once you start getting in the mindset of it gives,
Yeah.
it's a positive thing.
Yeah, no, that's a really good point. I think that's important because I think once you have losses, you're like, oh my god, it's kind of becomes this, like exactly what you said, right? It's like this thing, right? As opposed to kind of waiting for it to come to you, and then it's like coming to you and giving you something, right? And then, so I think that's a better approach.
But also the importance of knowing when you're wrong,
right?
In a sense of having stop loss, fine, but also technically not running after it. For example, okay, maybe this will turn out to be a bullish trend as well. But for me to buy here, I could say, yeah, that's a good entry, good. It goes up. Right. But it actually has made one new low, 3 new lows.
Right.
I should understand when the trend is over here. Yes, you can enter again. But once it breaks that one, you're just go away. Yeah. And before, in my previous life, I would re-engage here because it's not a new low. It's just on the same support.
Right.
Little did I know, I was just getting into more trouble.
Yeah.
And
so
then,
like right now, if it turned around and it did like a higher low, and then it started to go up again, that's the right. I mean, eventually, it's probably going to come back down and make a right.
If that happens, I have stop losses.
Yeah. Right.
But I want it to come down here.
Right. That's
sometimes
your plan.
It works, but really, my challenge.
Yeah.
This is my challenge at around 108.50.
Yeah.
That's what I fear.
That's when you have to make a decision.
Yeah, I really know that I need to watch that one.
Yeah.
Because I trade it myself as well. So when there is no pullback to this area here, like this, once it comes down again, it might come back up again.
Yeah.
That was last year, not last year. I'm just trying to figure out when it did the last time on my yen pairs. So around August is normally a good place for me. Okay, it wasn't that one. It was last year wasn't too good, but just 2018. Remember that. So yeah, here we go. Okay, fine. On another pair, maybe on the end. See, here you have a reversal kind of a thing.
Yeah.
With the breaks out, where some of the pairs came back all the way down here before continuing. And for me, when I'm up here and I'm buying and I'm like, yay, and then losing. Okay, I have lost so much. I'm out, but then it goes up again.
Yeah.
So I've learned that when this pattern happens, so that's also new now. When it's come down here again, it could turn.
Yeah.
But also, as you said, like now, this isn't too far off what do we have right now here, USD.
Yeah.
Like we have one, I don't know what you call it, three-way correction, what do you call it?
Yeah. ABC. Yeah, ABC basically.
Sorry, yeah. ABC.
Yeah, ABC, yeah. Exactly.
Because I would say this is a new trend to the lower side or continuation of the whatever trend has been happening already.
Right.
But as a buyer, awesome. Thank you. That's a good up move.
Right. What makes that look like a correction though too is especially as there was really no double top, right? Like it didn't really it didn't double top. It just went down and it didn't even, and that moved down too. That's like an A, like it didn't even make another correction up, and then it made like a flat, right? Or a what do you call it? A whatever that, a flag. It made a flag and then it went down again, right? So it's like that looks like a very typical ABC correction. It doesn't so much as look like a trend move. Because a trend move would have corrected more. It probably would have gone deeper. Made like a double top, or at least pulled back more, right? Yeah.
If you call this a flag, I don't know what you call it. I would say it's a weak. It's a
no,
very.
Calling the other move, the move up the flag, that right there, yeah.
This one.
Yeah,
or,
yeah. Well, yeah, that.
But this, but I guess there's a target here that has to be. Yeah, it's 131. That's a target basically.
Right. Yeah.
So this candle here is what I would say is the banana move, no, monkey move.
Yeah.
Do you know that move?
It's reaching out. You're saying it's reaching up, yeah. Right.
Like
is right.
If you go for a monkey, go for the banana, and you really stretch yourself.
Right.
You do that.
Well, that's like what the euro. That's like what the euro dollar did on Friday, right? It was basically just like a monkey move. Like it just went up, and then it came crashing down on Monday, right? Sunday, Monday.
Too much. Yeah. That's actually true.
Yeah.
So okay, so that's the risk that I see Euro USD at the moment. That this can just turn around and go higher. Yeah. So that's kind of what I have to live with. But I got my entries. I did my planning, and I'm still fixed to my plan until it makes a new high.
Right.
And then I'm out.
Right.
So right now I am saying that if let me find another word before. Where were we? I have different USDs that I can. Okay. So if price goes above here, closes with the body above it, I'm out.
Right.
Then I will close down all my trades, and then I would need a new low for me to engage again. So I will lose this, but that's better for me than to be on the right to upwards.
Right.
So I would rather win. I don't know what it is right now. What it would be up here. 66 pips.
Yeah.
Than to lose everything and even go to stop loss up here.
Yeah.
And so it's 100. Okay. So for me, that's an okay risk to take. To rather be that. So and then if it does go below, I am ready, willing, and able again.
Yeah.
Just like market here, where it consolidated, made a new low, then you have a new entry here.
Yep.
Welcome to the bonus track. Thank you guys for watching all the way through here. Right now, there's the bonus section of pivot points where me and Jared talks more about pivot points. This is optional, so if you want to continue watching, please do so, because we're talking about pivot points, how I use them, targets, and so on. So please join along and don't risk money you can't afford to lose.
Yeah, makes a lot of sense.
I'm just thinking of what you asked me in the beginning, the pivot points. Pivot points is something that I talk a lot about in the mentorship.
Okay.
Because it's not taught, and I wasn't. I don't know if I'm correct doing what I'm doing.
Yeah.
But because I haven't been taught by anyone. But
yeah.
It takes time to understand it.
Mm-hmm.
There's a lot of theories, a lot of planning, and there's a lot of confusion because there's a lot of information to take in at once.
Mm-hmm.
But once you start filtering out what's okay and now what price normally do, then you kind of find the rhythm in the end. But I find that, yes, as I said in the beginning, that if the trend ends strongly high, that for the period, that's normally a sell price, and then will come crashing down again.
Okay.
Yeah, and then the
sense.
same one. Like, but it's so crazy there. So, but also, I'm not supposed to use crazy, but that's how wicked it is. It can just go down, stop, and then go back up again.
Yeah.
But also, you have the monthly of the week on top of each other, which combined is dynamite. I can't remember right now where that one is, but for example, where is it? Wait, which one is it? Okay, let's see if I can find one. There we have it. Example. This is the monthly pivot. Monthly sell price, weekly sell price, gone.
Yeah.
Even though if it was an uptrend, I would also call this a resistance. Fine. This is the buy. Yeah. This is the buy for the month. I'm taking away. There's a buy zone here for this new week. Yeah. And it goes up to take profit for the month in the end. That doesn't always happen once it starts going from whatever price it does. No, from the whichever pivot it does start on. But that's what you're best with, kind of a thing.
Yeah.
Also here we have the end of the month. Take profit for the buyers, take profit for the week. It didn't go up to it, but almost. And then the new week afterwards, it goes back up to the weekly sell zone and sells off. So here you have the monthly and the weekly kind of, I don't know, cohesive working together. Yeah, and then sometimes
the green is the monthly and the red is the weekly. Is that what's going on, or?
This, so how should we explain this? This is monthly.
The red, okay.
Yeah, so it's between. Where are you? That's January to February. Yeah, so that's January.
Got it.
And then the boxes in between is weeklies.
Oh, I see.
And then I've just kept those ones who has been reacting to it.
Yep, I got it.
To see later on that it actually worked out.
Yep. That makes a lot of sense. Yep.
And then once it's now it has a very strong downtrend here. Just to say that this is the target for the month. It didn't come up to the sell pivot for the month of February. It starts in somewhere in between.
Yeah.
Also, that's also a monkey trade, by the way.
Yep. Yeah. Or correct it. It's a corrective pattern, right? It looks like an ABC. Okay. Yeah.
And then it goes beyond this first line here.
Yeah.
In my theory of life, I would say whatever happens after now can happen. I've reached my target. Go away.
Yep.
Because anything happen after that, it can touch barely and go up. It can consolidate and make a move up before down again, or it can just continue its trend. the possibilities of Pandora's box opens.
Yep. Yeah.
And it no longer becomes controlled and systematic, and becomes like, I don't know, take a guess. You might be wrong, you might be right. Who knows? Right?
Yep.
But this move here from January barely doesn't touch the target for the month.
Yeah.
There, if you can see that.
Uh-huh.
That's also one of the theories that I have in my life, that once you have 200 or 300 pips in profit,
you
shouldn't be too picky to get like the next 5 pips.
Yeah. Probably.
Because you can lose 100 or 200 instead.
Yeah.
Right? So if you ended up here, let's say, and that's 129, if you got out like worst case, like breakdown, but you didn't catch 230. So that's 100. That's actually 100 pips less. Worst case.
Yeah.
Are you willing to risk 5 pips for 100 pips? I'm not. Did you see the video that I posted today on the monthly? Well, with
no, yes, I saw you posted. I haven't watched it yet though. But
so it is with I don't know if I did it correctly though, in terms of caution people. Like last month now was a bit out of normal. That means this pivot point would be out of the normal.
Right.
But they're actually respected. A lot of the USD pairs started the month on the central monthly pivot, which is an aggressive move in the direction of the trend. So it's been played.
Yeah.
So it still works, but if we're going to have another, I don't know how much it is really right now, 800 pips this month.
Yeah.
I don't know. It's really up to the market to tell, and we're just playing as good as we can. How much is it? 600-700 pips.
Yeah.
Possibly.
Yeah.
I don't know.
Yeah.
But it all depends on how things goes in America for USD. But also bear in mind that now that all the fear that has been pushed into the market here, all the fear, once that goes away, we are now going to see the rebounds, right? Where we might fall, and then once we get a medicine, once we get a vaccine, just the news that we have a vaccine, the market is going to do a V reversal and almost like stop in its tracks, like we got a cure.
Right. Yeah. Right, exactly. Yeah. The hunger is going to be there to
Then all of a sudden we are back to risk on. We're back to limit up in the stock market. Well, going up. 10 seconds later. Thank you guys for being here until the end. This is the end of the video. Thank you guys for coming. Thank you guys for watching. Please leave a comment of what your takeaway was, what you learned, and I will keep uploading such videos if you keep commenting and keep liking them, okay? Stay safe and do not risk money out of what to lose, and happy Easter.